3 or 4 years ago, even 2 years ago, there was a sense that the market was going up, and it was going up so quickly that buyers had to move rapidly in order to be able to keep up. They felt like if they didn't get something now, they may not be able to afford it in a year or so. That's changed.
All these unicorns that were raising tremendous amounts of money, they'd say, hey, we're 100 employees now, we're gonna be 400 employees in 2 years, we need to go lock up that space. So they would go sign long-term leases on all the space around them and then not use it. What we've seen happen, a lot of those companies are releasing space.
The secret's out. There's more sublease space on the market. Companies that had, exponential growth projections are, reevaluating.
When the big boys start subleasing space, this is when the world starts shifting.
It's become a very capitalistic place, but there's still this underpinning of organic food and love and peace, and we're the Bay Area kind of thing.
I mean, that's where IBM and the big kind of giants were really innovating, and the HPs of the world and Jobs and Wozniak, it's kind of where it all happened.
The story of Silicon Valley, like the true silicon in Silicon Valley, starts with Shockley Semiconductor. A bunch of those guys left and started Fairchild Semi, and a bunch of people left Fairchild Semi and started Intel. So really the kind of founding story of Silicon Valley is a story of people leaving places to go places.
That was the axiom that software is going to eat the world. In a lot of ways, technology has been eating real estate.
There's definitely a trend to being in cities in the Bay Area. So San Francisco has become the focal point of the tech industry. That wasn't the case even 8 years ago.
In the past, Silicon Valley would get 7 out of 10 companies that would come here after receiving venture funding. Here being Palo Alto, Mountain View, Redwood City, and so on. 7 out of 10 companies now seem to go to San Francisco. I mean, investors, board of directors, everybody's paying attention to the real estate.
There's the images that companies are trying to project. They'd rather be in a cool south of Market location than some big, sterile campus in Redwood City.
San Francisco has had a tremendous run-up in the number of startups and venture funding. 51% of all the companies leasing 25,000 square feet or more have been in business for less than 9 years in San Francisco.
I remember when I moved here, I was in San Francisco maybe once a quarter or twice a quarter because everything was happening in the valley. And it was cheaper to have offices than Palo Alto, so it made a ton of sense to start here. Fast forward, it's so freaking expensive and impossible, you wonder where we're gonna go.
The marginal cost of rental space, of employees, of, you pick whatever it is, has just gone up and up and up.
It's very expensive to live here. It's a wonderful place to live, but it is unfortunate when some of the people who are really adding so much to our community can't afford to buy.
New York, in my mind, and I'm from there, I would always say is the most expensive place. And they're like, God, it's so expensive here. New Yorkers visiting here who are complaining about the costs.
Well, of course, the housing's the most expensive thing. I haven't really found any housing under $3,000 a month here for a 1-bedroom. I would do a studio, except I have a family.
I work in San Jose, but I live in Daly City. It's cheaper for me to commute to work than to move closer to work.
The cost of living in the Bay Area is just crazy. I come from Spain, which is a beautiful place to live. And there you can live for like, $1,000 a month. While here, with $1,000 a month, you're living under a bridge or something.
You look at these young folks and think, gosh, can I really afford to be here? And they're paying $4,000 a month for a 500 square foot studio, or maybe even if it's just a bedroom.
I moved out here with 7 other girlfriends from college. All in all, I think it actually has worked in our favor in the sense that we get to split rent by 8 people.
I actually live at home still. As of now, there's no way I could afford an apartment on my own or even a shack on my own.
You're grinding, living here. It's a bit of a catch-22 because it's creating great opportunities for work, but that's a tough way to live your life, commuting from Sacramento to San Francisco to drive your Uber for the day. There will be a breaking point.
This market has been a painful thing for buyers. It's impacted the people who have to live and work here because good paying jobs should be able to buy yourself a nice house, and then somebody comes in with a whole lot of money, an investor from overseas buys that property out from under you, and there goes your hopes of buying a house.
I have family that lives in Atlanta, Georgia, so you know a house out there, 3-bedroom, 2-bath is $250,000, and you could probably get a mailbox out here for that.
We're looking at a mid-range price of somewhere between $600,000 to $800,000 roughly. Now the nice thing about that is that's a real sweet spot. You have a lot of families that can still afford that price, and it's a decent home. So people who don't have tech jobs, they're out.
It's now so expensive to live here, to build here, that the economics are not as obvious as they were.
One of the fundamental challenges we're facing right now is sellers are looking at the way the market has behaved over the past 5 years. They haven't seen the trends and the softening and the flattening of prices.
From about 2013, 14, 15, you're seeing, double-digit growth, quarter over quarter with rents, and now you're starting to see a little bit of a pullback.
Companies have either planned to shed extra space, they've accelerated that process quicker than they thought that they would or would need to.
When companies find themselves having a sublease space, in the past couple of years, they were able to actually come close to break even. It's going to be harder to make that happen just with the amount of supply that's come on the market.
We've seen, prices of real estate go from $65, $70 a square foot to subleases going for $50, $45, et cetera. Where is that ultimately going to settle out? Who knows?